Good day, fellow investors. We analyzed the Austrian markets and there were many cyclicals with good returns possible there. And as I looked at every stock in the market, I also told you that I will dig deeper into sugar, discussing Agrana and Sudzucker, that also give possibilities as those are trading at multi-decade lows, and if the cycle reverts with these potential earnings, you know that the returns can be good as the returns were good many times in the past. We'll discuss Agrana and Sudzucker now and see how that sugar cycle might offer investment opportunities, especially because the demand, the everything is pretty stable, and then we as investors can follow the cycle, see the supply and demand, and try to understand when there is the potential for the next upcycle. Agrana trading at multi-year lows similarly to Sudzucker, and you can see when the cycle reverts, that's a potential 2 to 3x. Let's discuss Agrana, then Sudzucker. We have the presentation, they have sugar, they have the brand, but okay, it's just sugar as sugar. They have a fruit business, they have starch, and they have sugar. They are processing raw materials. If I look at the world sugar price index, it has gone down a little bit, but it's still far from the, let's say, end 2010 downturns when the situation was very ugly. Also, European prices are still stable or what is traded, but those are going down. You will see later in another chart, I think from Sudzucker. So it is a diversified business, which is always a positive because each of these segments goes up and down here and there. Even if one goes down, the others will always maybe keep the balance and not allowing for the company to go bankrupt. The owner, 50%, a little bit more, is also Sudzucker, so Agrana is also then included into Sudzucker's financial statements with that ownership. The market environment, we have declining sales prices, which impact the company. Then there is also the ethanol business. If oil prices go down, everything is connected, and you can see here how ethanol is also following oil prices, and therefore that also impacts the company. They are placed in this Eastern European part mostly with Austria, and the situation will remain challenging in the coming months, and the big question is when will it revert? European prices are also volatile with some bigger spikes over time, but then when those decline, there is always an impact on profits. And if we look at the key figures, EBITDA is down 44%, EBIT 50%, and earnings per share is down 70% compared to the good first quarter of the previous fiscal year. And not much has changed into revenues because they have these thin margins, but a lot changes into the profitability of the company, and immediately everything changes also from a valuation and investment perspective. The sentiment gets negative, the stock goes down, and the earnings per share go down accordingly. So you can see here the decline in earnings per share, and now if I replicate this for the full year, I'm looking at 0.4 euros per share for the full year, where €1 was made just in half year in the past. But the cash flows are there. As commodity prices go down, these companies can release some cash flow, which is always a good thing for commodity businesses. There is debt, significant debt, but okay, Agrana has been paying that dividend to the majority owner, Sudzucker, so they need those cash flows, which gives some kind of margin of safety that while you're waiting for the upturn, there will be good dividends. The outlook is for significant reduction in EBIT and everything. And if I look at this from a valuation perspective, if earnings are 40 cents, that's a high P/E ratio here. Thus, it can go lower if the downturn is prolonged. If the downturn reverts and they go back to the earnings of €2, the stock will quickly go back to 20. That's the cycle, and the conclusion is that there is a lower trading volume, so you have to accumulate patiently the stock if you want. Therefore, it's even cheaper than Sudzucker. You will see decline in everything, but we are still mid-cycle from those prices. We are not to 2018 downturns, and we have to watch the sugar cycle going forward. Let's check the parent company, Sudzucker. The stock is down significantly, so you can see this sugar downturn. They are expecting a significant decline in earnings in the third quarter, and they don't know when it will revert to better times. When it reverts, the stock will follow, but you never know when it will revert. There is significant debt. I think Agrana's debt should be included there, but you can see the cycle. Yes, revenues go slightly up and down, but when you look at the profitability, it is significantly impacted by that small changes in revenues, small changes in different prices. And this is now the spot price delivered reporting price, but you can see that the spot price, and this is what matters, is already significantly down, and therefore all these profits will be cancelled, and it's impossible to predict where it will go, because if we could, we would be sugar traders, but we are not. The balance sheet is levered. There is financial debt approximately 2 billion, which is significant. Operating results will go significantly down, so we can put a 0 for the year if things continue. If they can refinance this without a problem, and these are very cheap, now with higher interest rates it might even cost higher, then we can see a rebound. But to understand this, you need to follow and learn the sugar cycle. However, now is the time to look at it because things are cheap. I already have exposure to food stocks, so when I look at the average dividend paid over the cycle, not these exuberant times, the yield is 5% on the current market cap, so it's not really that cheap. I don't think it could go lower, well, really in a prolonged downturn, because if we go back to 5%, is the safety there for this European company in the market? But given the situation, I have food exposure already, it moves together, there is no competitive advantage, therefore I prefer fertilizers that have a competitive advantage. Forget 2023, interesting dividend, but Agrana is priced better because it's smaller likely than Sudzucker, and it has a better return, a better yield, and it is likely the same company with ups and downs. So I'm putting here more risk because there is no competitive advantage as some other companies that we have discussed. Ups and downs, Agrana is more on the 7-8% there. Check my Austrian videos, and what I miss is the growth, because if I look at the same companies in Asia, food companies, the population is growing, economic growth is there 5%, in Europe there is none. There is not more people that will eat, etc. So there is missing this structural growth trend. That is something very important to think about. Okay, sugar, the cycle will be global, prices will be impacted by that global demand, so somewhere it will revert, and these stocks will be a 2 to 3x. We'll see which ones I'll put on my covered stock list on the platform to really try to learn more about the cycle. And we are now perhaps at mid-cycle in Europe, mid-negative cycle, so there is still more room for risk before making this an absolute bargain. Thanks for watching, I'll see you in the next video.